First one up here, SoFi Technologies, about 200 shares of SoFi here today, paid $7.74 for these shares. 200 shares in total. When it comes to SoFi, I'm now up to 3,700 shares in the public count. That's a little over a $28,000 position. So far, we're up $2,500 on the stock, up about 10% so far, which is a small amount of money. Before I go into my projections, I do think it's important I just speak about SoFi. I know the stock has a lot of people discouraged because it just seems to be stuck at like $7. Every time the stock actually starts to do a decent rally, seems like it just goes right back down to 7. Listen. You gotta be patient with these sort of companies. A company like a SoFi, you gotta have patience with it. It's a high growth company. It's in the banking space. People aren't used to paying big valuations in the banking space because generally speaking, banks don't have much for growth. So a lot of people say, why would I pay up for any sort of financial institution, these banks, right? We do know SoFi is a very different story. They're phenomenal at attracting the younger generation, specifically under 40 years old. Those people's net worths are likely going to grow extensively over the next 10, 20, 30 years. And SoFi's assets under management is going to go up immensely, right? The total capital in regards to SoFi is going to go up insane over this next 10, 20, 30 years, right? As long as they make it through all the different storms that we'll have and recessions and those sorts of things, they're going to be looking great. But you got to have patience with these sort of companies. When SoFi does make its real move, and when I say real move, I'm talking about, stock goes 10, then 15, 20, 25. When it makes its real move and gets out of this, $6, $7, $8 range, it's going to move likely quick. In these sorts of stocks, all of a sudden in a 12-month span, they can make gains of that you had hoped that you would get these gains over several years. You can get that within 12 months. It happens a lot of times in regards to the market. All of a sudden it clicks for people, clicks for investors, momentum gets behind it, and next thing you know, you got Wall Street coming out after the stock like, oh yeah, this is actually a great company, and oh, they are doing all these big things, and next thing you know, this big analyst is covering and this big analyst, and they're all bullish, and it can happen quick. Like in a matter of 12 months, everything can change for a stock price. So that's kind of my opinion. Now, SoFi, obviously, before we get into the cases around SoFi, obviously it comes with risk. It's a bank. Anything that's banking related is a risk, right? SoFi has its tech side of the company, Galileo, which is phenomenal. But at the end of the day, SoFi's core business is in the banking business. And so whenever you're in the banking business, you always have bankruptcy risk. It doesn't matter if you're JP Morgan or you're SoFi or Wells Fargo or Bank of America. It doesn't matter who you are, you always have that risk. Some regional bank. So it is something to always keep in mind. But SoFi looks pretty darn attractive. So here's my base case for SoFi. I don't know if I've ever shared this before. So this might be the first time I've ever shared my base case in regards to SoFi. I'll also go through my bear case for SoFi and my bull case for SoFi. Not going to go through my ultra bull case or my ultra bear case in regards to this one. By the way, ultra bear case for all banks always is bankruptcy. It's just so you guys know. So my base case, what I'm actually expecting for SoFi is 20% revenue growth on average from 2025 to 2028. I don't think it's a crazy assumption. First off, they've been growing way more than 20% for quite a while. I believe 20% is a realistic number because they continue to attract more and more members new to SoFi. They're going to be able to sell those folks many various products over time and many loan products as their customer base gets their net worth up as well, right? That's even a bigger opportunity to sell even more products to these folks, more products and services, right? And then on their tech side with what they have with Galileo, I'm feeling pretty confident this company is going to be able to grow about 20% on average per year for the next several years. Bottom line, I believe, is going to increase more rapidly at about a 35% clip. Remember, SoFi's just at the infant stage of getting to profitability here. They just got over the hump here recently, right? So net income, I had that going up about 35% a year on average from 2025 to 2028. Net income margin gets to about 18% for this one. Now, if you're growing 20% top line, 35% bottom line, easily you're going to be able to command a 30 to a 40 PE ratio, which in that range, that puts SoFi somewhere between $15 and $20 come 2028, which gives me a compounded annual growth rate on the low end of about 18% and on the high end of about 26% in regards to this one. What about my bear case in regards to this one? Well, here's my bear case for SoFi Technologies. My bear case is a situation where we have a pretty substantial recession in the next 1 to 2 years. And so therefore, SoFi's growth rates are really limited during that particular time, right? And so they only do 10% revenue per year on average from 2025 to 2028, right? Which would be very bad numbers for SoFi. Net income growth outstrips that, but not that much. They do about 15% net income growth. That puts them at net income margins in 2028, even as a much more mature company at that time, which, keep in mind, I still wouldn't call SoFi a mature company in this entire decade. You got to look all the way out to the 2030s before you really start to feel SoFi is a mature company. But it's a more toward a mature company in 2028. Net income margins of 14% on this one. 25 to a 35 seems about right in a bearish scenario for SoFi, where they're growing revenues only 10% on average a year, which puts the stock somewhere between about $7 and $9 come 2028, which would be a compounding annual shrink of 4% and a compounding annual growth on the high end of about 4%. So definitely disappointing. That would be definitely disappointing, but you never know. Like, that's always a potential, right? So it's something I do have to factor in. What's my bull case looking like for SoFi Technologies? Here's my bull case. My bull case is they grow revenue 25%. Now, keep in mind, they've been still growing revenue way over 25% the last several years. So even 25% might not be the most bullish number you could ever imagine. 25% is the average I have for 2025 to 2028. Net income I have going up at a 40% clip on average from 2025 to 2028. Puts them at net income margins of around 18% come 2028. If you're growing 25% top line, 40% bottom line, SoFi should be able to easily command a 45 to 65 PE ratio on this one, which in that situation, that would put SoFi stock in 2028 somewhere around $26 to $37, which is a compounding annual growth rate on the low end of 35% and on the high end of 48% for SoFi Technology. So yeah, I am going to be a very, very happy camper if this scenario plays out in regards to SoFi. Like, oh my gosh. So, and last thing I'll share about SoFi is Anthony Noto. I've been very impressed with that gentleman. He's gotten this company through some, in my opinion, very difficult times. The Rona shutdowns, he got the company through. Obviously, they had a substantial, and they still have a pretty good sized business, but they had a crazy big student loan business. And then all of a sudden, next thing you know, the government's saying you don't have to pay back your student loans and all that stuff. And that extremely negatively affected SoFi, right? For years. He got them through that. He got them through this high inflation. He's now gotten the company through super high interest rates, the highest interest rates in 2 decades, right? Highest interest rates in 2 decades, in the longest we've been up at high rates in the longest time. And he's gotten the company through all this crap. Like, I think the man deserves a little dang respect, don't you? So that's one other thing I really like about SoFi, and that's why I'm putting my money where my mouth is and buying more shares of the stock, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Now, Cheesecake. This is a run. So Cheesecake's up about 10%. Now, this is a restaurant stock. So 10% a month with no earnings, that's a historic run. Like, this is insane. This is a restaurant, right? Now, I think there's 2 things going on here in regards to cake. One is, we know we're going in a lower interest rate environment. That's phenomenal. Cheesecake Factory has a lot of restaurants to build between North Italia and Flower Child. They have a lot of restaurants to build over this next 5-10 years. So if we could be in a lower interest rate environment, that would be ideal for cake. And I think that's definitely going to benefit them. And I think that's one of the reasons people are looking for the stock. I think the second small reason is it's got a big dividend yield. So I think people are starting to look for yield, and Cheesecake provides that, right? And the third reason is I think actually finally some people are starting to wake up to the fact that Cheesecake has 2 brands that are going to become national brands across the United States of America, right? North Italia and Flower Child. They have not one concept, but two concepts that you're going to see expand all across the United States of America. And they're the only ones that are in that position as a restaurant chain that has two concepts that are about to go national over the next 5-10 years and become like huge brands that are going to be known in every major city out there, right? And so that's just an incredible opportunity. So I think some people are starting to wake up to that. And that's why you're starting to see more and more momentum come in that name. And as somebody that wants to hold this stock long term, this stock could be $200, $300 stock someday. I do not want to sell any shares of Cheesecake, right? Honest has been a cold as ice stock, but I wouldn't be surprised if it comes back to life. I still think this baby's getting out of the gulag this year. I really do. And out of the gulag's $5 plus. I really, truly believe the stock's getting out of the gulag this year. And so they got to come through with good earnings. They come through with good earnings. We're getting out of the gulag, baby. And we're never turning back in regards to that. So we'll see. Shopify, very nice move here for Shopify. 13% plus in the past month. Here's the deal in regards to Shopify. It's one of those stocks you buy and you buy more and you hold and you hold and you hold. And you just call it a dang day. Okay, not that complicated. Celsius Holdings, cold as ice. We know that. Stock's down 17% in the past month. This is opposite of hot. I went very in-depth in regards to Celsius last night on the channel. Did I buy Celsius stock today? The answer is yes. I bought Celsius stock literally today. I went very in-depth on Celsius. I think I did like a 19-minute video on Celsius last night on the channel. So if you want to hear me talk very in-depth about Celsius specifically, watch the video I produced on this channel, the reaction channel here last night, and you'll get to see that, okay? Tesla, listen, those delivery numbers were a huge breath of fresh air for me specifically. Huge breath. I loved those numbers, right? Were those the most exciting growth numbers in Tesla's history? No, absolutely not. But very nice numbers compared to the previous quarter. We're headed back in the right direction. Those numbers made me feel much more optimistic about Tesla. I can tell you that. That was a big. Very, very happy in regards to those numbers. So now 1010's up next. Winning resort stock is ridiculous. In the past month, the stock is up 37+%. 37+%. It's insane. This is what's so beautiful about being a stock picker, is how irrational the stock market can be. Did Wynn's business model just fundamentally change for the positive or something like that in the past month to make it go up nearly 40% the past month? No. People were just irrational with the stock. The Vegas numbers are incredible. The Macau numbers continue to strengthen, and they're pretty dang incredible. The Boston properties numbers have been good. Like what? And we're going into a lower interest rate environment. So now all of a sudden everybody wants to own Wynn stock? Like, come on, man. Like, this stock is set up in such a phenomenal situation. Like, and people say, oh, well, it's the China stimulus measures. Listen, Macau's putting up great numbers, regardless of the China stimulus numbers. Like, okay, let's say it helps a little bit. Okay, big deal. Like, Wynn's customer base, they're rich no matter what, right? If somebody's going to go drop $100,000 on some baccarat at Wynn Palace, like, whether there's stimulus out there or not, like, it doesn't really matter to them. So my opinion is the market's completely been irrational around Wynn, and now all of a sudden they want to own Wynn. It's hilarious, man. It's hilarious. The market can be so irrational, but as a stock picker, we love that. It's a phenomenal opportunity for us, right? PayPal's made a move here about 10% in the past month. Obviously PayPal has a long run to go. This stock, I see a day when it's 120. I see a day when it's 150. I see a day when it's 200. So it's got a long run ahead. Chris, he keeps coming in with these numbers. Oh man, did I buy PayPal stock today? I think that's a fair question. Did I buy PayPal? The answer to that is yes, I bought PayPal stock today, right? And even though it's made a very nice move here recently, the stock's still heavily undervalued in my opinion. So I'm like, hey, it's 79 bucks. Give me more PayPal shares. Palantir. Oh my gosh. 33% move in the past month for Palantir, and it's over $40. Let's go, baby. Let's go. Very exciting. And here's the deal with Palantir. If Palantir If the company comes through with a 30% plus revenue number and a 30% plus revenue guide, we're going 50. We're going 50. Now, if the company comes in with, let's say, revenue growth at 23%, 24, 25, something like that, I think there's a decent probability we go right back down to $32, $35. I think it really comes down to this. I think if we can go 30% plus revenue and people start getting confident about 30% plus revenue, psychologically, that's such a key number for Palantir that I think you'll see another huge upward move in regards to Palantir stock after their earnings. But like I said, if the numbers really disappoint, don't be surprised if it goes back down to 32 to 35 range. But what a run for Palantir. Fubo's been cold. I don't get it. I honestly don't get it. Everything's improving in their business model dramatically, and not just like small amounts. Like the legal stuff's going the right way. I mean, Fubo, I would say, of the past several years, Fubo's probably the least risky at right now than it's been in years. And so the fact that stock's less than $1.50 is mind-blowing to me. I would think this stock would easily, I wouldn't expect it to be out of the gulag, but I would expect it to easily be $2 or $3 right now. $2 to $3 range, yes. And then we can say, if all of a sudden the company gets to like a break-even quarter in the first half of 25, I think the stock gets out of the gulag. Once people are confident, like this company is going to stop being a money burner, I think we get out of the gulag. We go over 5. But for right now, given the losses coming down, given the legal stuff going in the right direction, more subscribers, more revenue, I would think $2, $3 right now. Like, I'm mind blown. So I don't know, maybe this makes some historic run at the very end of this year. But and obviously, if we go into a lower interest rate environment, that's good for Fubo as well, just in case profitability takes longer than expected. But it doesn't look like it's going to. So I don't know, man. I don't know. Either I'm wrong on the stock or it's about to make a historic run. That's all I'm going to say. And you'll see the stock. And that is something to keep in mind with these stocks. When they do run, it's epic. It's epic, right? Honest is a perfect example of that. Honest is up 215% in the past year. And this run it made from from basically the beginning of November to let's call it the end of December. So this was around less than a 2-month run, right? The stock went from $1.10 to $3.40. So that's why I say, like, could Fubo go from $1.50 to $3+ by the end of the year and make that move in a matter of a month or two? I mean, it's possible, right? I'm not going to bank on that, but it's definitely. Would it be surprised if Fubo went from $1.50 to $3.50 by end of year? I wouldn't even surprise me one bit. So once again, I wouldn't bank on it, but I wouldn't be surprised. Elf on a Shelf is as cold as mold. The stock's down 23% in the past month, like dramatic, right? Here's the deal in regards to Elf. The same people that are rushing out of the stock to sell at $100 are going to be the same people running into the stock to buy it back at $200. It's ridiculous, man. I mean, such a great company, such a ridiculously great performer, and top notch. Like, this is one of probably the top 10 most well-run companies in the entire stock market. Like, put them up there with NVIDIA. Put them up there with whoever you want to put them up there with. Meta, right? Palantir. They're a historically great company. And, it'll come around. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. services sector propel economy to soft landing.
Data ahead of tomorrow's key jobs report. It was ISM services. A lot of headlines here also, because the headline showed the fastest services growth in this country since February of last year, and a big jump from the prior month. Meanwhile, good news as well for jobless claims, still around 225,000, although that level will soon be affected by Hurricane Helene and the ongoing strikes at the port and at Boeing. All of that said, stocks are lower today as this October choppiness continues. My next guest is buying the pullbacks, though. Joining us now is Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute. What do you make of the services data, Paul?
Yeah, the economy has been bifurcated for some time. Manufacturing has looked weak. And if you wanted to look for a recession case, that's it. Anyone who depends on bank lending and has had to suffer higher rates, they're really suffering. But the services sectors have done really well for the last couple of years. We think that's going to be the engine that propels this economy to a soft landing and then to a recovery that gathers strength as 25 develops.
The chatter that I'm hearing is that it's too strong. Not that people are doubtful that it's true, but that if it is true, do we have to start worrying about inflation again? And forget soft landing. Do we have to worry that the Fed perhaps doesn't cut at all like what we're expecting right now?
Well, there is a disconnect between the market expecting 2.5 percentage points of rate cuts and others on the street. But look, as the economy slows, and it is slowing, services will go with that. It won't be quite as strong as it is today, and that should help moderate inflation going into next year. What happens into the balance of 25? Yes, you're right. We do think inflation does pick up in the second half of next year amid that cycle, improving. That's why our rate cut forecast is only for 8 instead of the 10 that the market is calling for right now. That's just going to create a little bit of volatility for next year, but it doesn't really prevent us from right now starting to position for that recovery that we think will extend even beyond 25.
Yeah, there's a thing I'm concerned with in regards to inflation. I'm not worried about inflation throughout the end of this year. I've been on record of that many times. I'm not even worried about inflation at the beginning of 2025 either. Back half of 2025, that's when I start to get more concerned about inflation again. And the reason being is, commodities have been the best case scenario you could have ever imagined. Commodities have been for really the past, I would say, year. I don't think that lasts, especially if the Fed keeps cutting interest rates, right? And as long as the economy doesn't completely fall apart, and if you have China coming on stronger next year, which is definitely a possibility with all the stimulus measures they have going through, you could look at oil price going higher, you could look at natural gas price going higher, you could look at commodities in general going higher throughout really even the end of this year, but going really specifically into 2025. And then it'll start to hit the economy and starts to really hit those, let's call it those inflation numbers kind of in the summertime, right? And so, that's something I look at and I'm like, that worries me a little bit as far as next year goes. But it's more of a, in my opinion, kind of second half story than first half story.
What's interesting to me is that as someone who thinks inflation could prove sticky, you still prefer large caps over small ones. Dan Suzuki also thinks inflation will be sticky, prefers small caps over large ones. Why do you think that that kind of macro is not one that would necessarily favor the Russell 2000?
Sticky is sort of a sticky word. If you think about 2.5% inflation, that's plenty enough for the Fed to continue cutting rates. If inflation were to stick around 3 or 3.5, that would be more serious, and then we'd be more concerned about small caps. But we're positioning right now. We're underweight small caps relative to large, but we're at strategic levels. In other words, we want investors to be at their long-term goals for small caps, getting ready for a recovery that we think will develop more quickly and more strongly, more forcefully than inflation.
I just logged into my Fidelity because I wanted to see if Meta hit $1 million position. I've never had a $1 million position in one portfolio. Never. This would be my first time I ever had $1 million position in a portfolio that I remember at least. And so Meta, $990,000, $990,709 to be exact in the public account right now. So, it's so close. If tomorrow can just be a somewhat decent day for Meta stock, it'll be $1 million position, which would be very exciting.
Well, and that's going to be, and it's typically a good environment for small caps. So we don't want to be underweight small caps here. You want to be at your strategic long-term goals.
Okay, so you're also looking at communication services, industrials, financials, materials, energy. That's kind of a very broad way to look at things. But if you had to boil it down, where would you say that you see the most opportunity for alpha relative to the consensus, either in specific stocks or sectors?
Yeah, because our view on inflation is maybe a little bit more sanguine than others going into the year, we would position more cyclically. In other words, position for the economy to recover early in 2025. Expect that to be the main story, and that explains the predominance of cyclical sectors, or that is sectors that should do well as the economy begins to recover. So industrials, materials, right, energy, and financials all should do well as the economy starts to recover.
Yeah, and then finally on Mag 7, I mean, and technology in general here, what do you do?
Yeah, technology has looked expensive to us for a while. We need to see much more of a pullback. We might get that considering all of the uncertainties that are swirling right now. The Middle East, you mentioned earlier, the strikes, the weather, the Hurricane Helene, and the damage that it did in the southeastern part of the country. Though those are all going to register some kind of hits, either to higher oil prices or to the economy directly. Then you've got the uncertainties around the election. There's always uncertainty around election time. And so on those sorts of pullbacks, a 5 to 7% pullback here would not be unusual. That might provide a good opportunity to buy those Mag 7, that information technology sector, at a more attractive price.
I see. All right. Sounds good. We'll see what the next few weeks bring. Paul, thanks for your time.
All right. Thanks.